Hello, trading is closed on March 15th, 2016. Yesterday I said that absent a gap over this high, which didn't happen, that we should see lower prices, and we did trade lower all day long. During the day, MEJT gave a buy signal in the afternoon that said the move had a tendency to be a weak move. We really didn't rally too much till right at the end. Early on, it said ultimately lower prices will print, gives us a target of 2005.22. There's no specific time limit, but usually we don't have to wait long. For tomorrow, we have mixed signals, and I'm expecting a whipsaw, and that would be true even if there were not an FOMC meeting. This is a pattern which typically closes at the day's low. When it closes at the high instead, it's usually quite positive unless it reverses promptly, gaps down, and takes out this low. That is not impossible because of the ultimate MEJT target near the low, and because we closed exactly at the high, a Hobson close, and because we have a wall into the close. All these tend to argue for a gap down. However, starting out low, rallying all day is usually positive and is often followed by a gap up. Based on this, I think we're going to have a gap tomorrow outside of today's range. If you look at what happened, here's your diamond, here's your stilt, here's your stilt, here's a diamond. It's pretty obvious. Take the height of the diamond. Use your Fibonacci grid. There's the target. We are now right at the resistance of the pattern. So it's plausible if we stop here. However, I think it's also plausible if we have a day just like today. So we have a stilt here, this being the height of the new diamond, and a diamond formation too. When you have different options like this, you can't say with certainty which one of them is going to be the right one. We have a 30-minute chart. We have number 12 of 13 bars of a sequential sell. Number 13 is supposed to be over the close of number 8. It doesn't always work. We have number 11 of 13 of a combo sell. 12 and 13 don't have to hit new highs, but they often do. So again, it's a possible sell. But if we trade a bit higher, it would be a more convincing pattern. I don't have enough to say that this rally is over, but let's look at a few things. Here's your 89-week moving average on the weekly chart. Other than the whipsaw here and the whipsaw here, it's done a good job of dividing bull and bear markets for years. And we are hugging the underside of that right now. Also, if this is wave 1 and that's 2 and that's 1, 2, 3, 4, 5, and this is wave 4 and this is wave 5, if that's the height of wave 1, and we have a truncated wave 5 right here, it's right at a Fibonacci 38.2%. So there is resistance right where we are now on the weekly chart. I'm not convinced it'll hold. In any event, I'm looking for a whipsaw tomorrow, a gap outside the day's range, and either tomorrow or soon thereafter trading on either side of today's range. And that's today's call.